It's time for business news with Richard Southern, and we begin with a historic rate hike from the Bank of Canada.
Hi, Melissa. It was a surprise. I like surprises, maybe not specifically this one, but we were expecting a much smaller rate hike than what we got from the Bank of Canada this morning. The bank said we're hiking interest rates a full 1%. Nobody saw that coming. It's the biggest rate hike since 1998. The benchmark lending rate now at 2.5%. This is the fourth such interest rate hike since March, and it's all as the bank looks to temper down hot inflation. So, what does it mean for you specifically? First off, mortgages. Some mortgages are going up. If you have a variable rate mortgage, it's going to cost you more right away. Those have been going up steadily since March, variable rate. Fixed rate, you're going to pay more when you go to renew. Keep in mind that if you're looking for a new mortgage, you're going to be stress tested at a higher level. Higher borrowing costs. Anything tied to a prime lending rate is going to cost you more. Be that a line of credit, student debt, car loans. Most of the big banks have increased their prime rate to 4.7%. It's not all bad news. Savers have a reason to celebrate. The banks are going to pay depositors more. So money in your savings account, certificates of deposit, money market accounts, they're all going to earn a little bit more money. And no worry with plastic, rate hikes not expected to impact credit card interest rates if you have a balance on your card. And Melissa, the bank says we're probably going to hike rates even further this year because inflation is running that hot.
And we also have something else costing a little bit more. A trip to the LCBO could also cost us some more.
Oh, boy. Now it's hitting home with me, you know. I could deal with everything else, but here we go. It's wine that's going to cost more soon. This is according to a story in the Toronto Star that they did some great work with. The LCBO, according to the Star, has sent Ontario wine agents, that's who they buy the wine from, they sent them a letter announcing new freight costs for importing wine. So this is going to be higher prices for all imported vino. For example, some wines coming from Spain will rise $15 per 20-bottle case. Some wines from Italy to go up $20 per case. Others from Argentina also to go up $20 per case. And this is going to take effect on September 12th. So you may be advised to stock up now if you do enjoy your wine imported. As you know, I like my Ontario Tetra Pak wine, which is not going to be affected, Melissa. So I'm fine with that.
Okay, now the fallout continues from the massive Rogers outage that impacted millions of people on Friday.
Sure is. We have a new statement in from the CEO of the company tonight indicating that finally everything is back to normal, according to Tony Staffieri. He writes in part, quote, "Our network is fully operational to the standards you have come to expect. Our customer service representatives are working around the clock and have caught up with the backlog of issues." CEO goes on to say that the company is working with governments and our industry, he says, to implement what is needed to ensure that 911 and essential services continue no matter what outage has occurred. Last night, Rogers announced it would credit customers the equivalent of 5 days of service because of this outage. Rogers stock fell 1.3% today. It is the parent company of CityNews.